Let's see if, there we go. All right. So Community Investment Corporation, we are a nonprofit located here in Southern Arizona. We serve the entire Southern Arizona region. We focus in the areas of education, home ownership, and entrepreneurship. And with the entrepreneurship bucket, we have a number of programs to support small businesses, both through access to capital and financial education. So that's what we're here today to talk about, is our entrepreneurship programs. I'd love to just understand who's with us today, what brought you to this session, and also where you are in your business journey. So I'm going to pop up a couple polls. If you could answer both of them, I would appreciate it. So the first one is, what brings you here today? Are you looking for funding for your business? Are you interested in what it takes to get a loan? Or you just like CIC and you're here to support us? And the second is how long you've been in business. Awesome. All right. Interested in funding and what it takes, and you've been in business for a couple years, so that's exciting. All right, I'm going to go ahead and end the poll. If you have any information you want to drop in the chat later, please do so. Oh, I guess I can share results. There you go. Now you can see how they were answered. Okie doke. All right, so we're going to cover a number of things today. We'll talk about some considerations before applying for a loan, the typical documents required, the different options that we offer here at CIC, and then we'll share a few examples of some clients that have gotten loans from us and different ways that they've used them to really help propel their business forward. And then we'll follow up with some next steps. Again, if you have questions, feel free to pop in anytime. I will pause throughout the presentation to allow time for questions, and then we'll certainly have time at the end. So if you are here today, I assume that you are interested in looking for funding for your business. There's a number of different ways that you can fund your business. And so I want to take a minute just to go over some of the more common ways. Not all of these options will be available to you right when you start, but over time, your options will increase. So personal savings, money from family and friends, and credit cards are the most common ways to start a business and places to get money when your sales are down. Personal savings or friends to borrow money from, and that's why CIC is here. We understand that the playing field is not equal. Crowdfunding is a way to raise money from a large number of people, typically via the internet. So when we think of crowdfunding, typically the first thing that comes to mind is donating money to someone in need. Crowdfunding is just a mechanism to collect money from like a group of people. You can also use that mechanism to raise money for your business through loans or equity. There are a number of different websites facilitate that. One of them is Kiva, which we'll talk about later in the presentation. So when you hear crowdfunding, just know it's not just like a donation platform. It can be used in a number of ways. Grants. Everyone loves free money. Grants aren't totally free, but I think when we hear the word grant, we think free money. So there are definitely a lot of strings attached to grants. You have to apply for them, which is work. And then you also have to complete work for the grant and typically provide reporting. So during the pandemic, business grants became more common. Grants to businesses aren't that common in the normal everyday world. But during the pandemic, there was a lot of money to support for-profit businesses and to keep them going. A lot off, so they're not as common, but that is one of the first questions we get from businesses is like, I'm looking for grants, like where do I find grants? So I also just want to make sure that everyone understands that grants aren't very common if you're a for-profit business. I mean, even in the nonprofit world, we do operate on grants, but we spend a lot of work and time applying for grants and trying to find grants that fit what we're doing, and we're not always successful in obtaining them. So while they sound great, definitely not something that I would count on in trying to come up with a strategy for how to fund your business. Angel investors, venture capitalists, and private equity all refer to someone giving you money in exchange for ownership in your company. These funding methods are harder to come by and often focused on high growth companies. I think this is what people think of when they hear like an investor, right? You want an investor in your company, but this isn't the right fit for everyone. So certainly something to keep in mind. There are options out there. I think we hear of the big success stories. We don't realize what goes into that, or, you know, that they are pretty hard to come by. So the options that you as business owners will most likely have access to, especially in your early days, are loans. And these really, like, you are more the driver of when you apply for a loan. There's lots of companies, right? You go to that company, you apply for the loan, and they make a decision. You're not fighting with a bunch of other companies to try to get investment from one single person. So within the loan and revenue-based financing buckets, there are different levels of availability based on the age of your organization and the size of funding that you need. My presentation today is going to focus on these two options, and these are the services that we provide. I really like this chart just for the visual aspect of the ladder. So it really represents the journey of your business. And we know that business is not this simple, right? It's more like a game of chutes and ladders. Like, you're going forward, you take a few steps back, you move forward, you slide down a ladder, you keep going. You just navigate that and you grow and you learn as you go. But what this ladder represents is really the different levels of your business journey and what funding is available to you as you go. So when you start your business, you're going to be on that bottom rung of the ladder. The things that you're going to have available to you typically are money, right? Your own personal savings, borrowing from friends and family. We talked about, you know, using a credit card. So those are the easiest sources to obtain funding from. As your business grows, as you make sales, as you acquire customers, you're going to unlock different levels. You're going to move up that ladder. So we're going to start down here. As we grow, we're going to start unlocking online loans. These are a lot more common these days. I do want to caution that online transactions, while they are fast, they can be very expensive. So if you are obtaining an online loan, make sure that you understand what you're signing, and compare it to some other products to make sure that this is the right fit for you. So your online transactions are going to be easier to get. They're going to be a little bit more expensive. They might not require as much paperwork. As we move up this, the next level is alternative community lenders. This is where CIC falls, your credit unions, SBA loans, other nonprofit lenders in this space. So typically our rates are going to be a little bit less than your like online transactions, but we are going to require a little more paperwork, right? But there's a cost benefit to that. And then the top of the ladder is your conventional banks. This is where we want every business to reach. And the reason for that is your banks are going to offer the best interest rates and the best terms. So here at CIC, we can offer loans up to 5 years. A bank can offer you a loan up to typically 20 or 25 years if you're, you know, looking for real estate. So what you want as a business is to be able to access all of these options. That really puts you in the driver's seat to compare and to find out what is best for you from a cost perspective and really meets the needs of the funding that you're looking for. But it's definitely a stepping stone, right? You start small and you move their way up. So I hope this visual was helpful just in understanding where you are in your journey and what options are available to you. And that also help sets expectations. All right, so if you are going to apply for a loan, or if you're considering applying for a loan, there are 3 questions I would suggest that you ask yourself. These seem like silly questions, but they're some of the first questions any funder is going to ask you. And it is not uncommon for businesses to not be able to answer these. So the first one is how much, well, really the first 2 go together. How much money do you need and how will the money be spent? So your chances of receiving a loan are greatly improved if you are able to articulate why you need a loan and how the funds will be used. So for example, if you'd like to purchase a new piece of machinery, research what it would cost so that your loan request is accurate. If you do not do that research before you start the loan application process, you're going to have to do it during the loan application process, which is going to slow down how quickly you're able to access money. So ultimately, if you want it done really fast, definitely as much work as you can do ahead of time will benefit you in the long run. And really, I mean, one of the reasons for this is we want to, if we're making a loan, we want to make sure that you're able to complete whatever project you're set out to do. Making a loan is not helpful if you can only buy half of your equipment, or if you can only complete half of your remodel. So that's why lenders are wanting to know specifically how the funds will be spent. Have you obtained a bid? Do you have an invoice? Have you thought through all of the details of that? So that's our intent. We're not trying to make your life harder. We want to make sure that you can do what you set out to do. And then the third question is, what collateral do you have to guarantee the loan? So collateral is assets that you pledge as security for repayment of the loan. So in the event that your business is not able to make its payments, the assets can be sold to repay the loan. Not all loans require collateral, but it is fairly common, especially as the loan size increases. Collateral is one of the bigger hurdles that small businesses face. They're in need of a larger amount of money, but they don't have the assets to secure it. So really, I like to include this question in my slides, mostly for setting realistic expectations. If you're a newer business and you need $100,000, but you only have, say, $20,000 in assets, you're probably not going to be able to tap into a $100,000 loan just yet. But yet is the key word. Growth happens over time. Sometimes it's slower than we like, but it's still possible. So maybe you have to scale back what you're doing to start until you can grow your balance sheet. And then later you're able to take on more capital. All right, so keep these questions in mind if you can. If not, we'll definitely help you walk through them as you're working with us. Okay, so now that we've talked this through, we're going to dive into what's required to get a loan. So the first step in applying for a loan is to make sure that your business has been legally established. So you should have decided what type of entity you have and have the appropriate paperwork to go with it. We operate in the state of Arizona, so you should be registered with the Arizona Corporation Commission and in good standing. You should have a tax identification number from the IRS, and you should have a bank account in the name of your business. We do see a lot of businesses, especially in their early days, operating out of their personal checking account. We highly recommend that you separate out your business and your personal expenses for a number of reasons, but definitely if you think you're going to want funding, you're going to need to have clear records of business income versus personal income. So the sooner you can separate that out, the better chance you have of getting funding when you apply for initially. Some lenders may make you wait a period of time, or it may hold up the process. So definitely do that now if you can. So once the legal aspects of your business are squared away, the next step is to think about how much money you need, how it will be used for. And then the lender is going to collect a bunch of documentation. So I'm going to go through a list of typical documents. If you have not provided a loan package before, this might be a pretty daunting process. We are here to help you and to walk with you through this process. So still reach out and we can go through this together. If it's not something you've seen, we can help you prepare. We can tell you where you need to get it. So if you're here for informational purposes today, this is really good. That way you can be thinking about it and make sure that you have these practices in place in your business now, so you're ready to go whenever you do decide that you need funding. So the first one is a business plan. If you're a new business, we're going to ask, and what I'm sharing on this slide applies to most lenders. Each lender may have a different period of time of documentation that you're looking for. But for the most part, these are pretty common documents when you're applying for funding, and that we just use in the business world in general. So anyway, back to the business plan. So if you're a new business, a lender's going to want a business plan. So the business plan takes your idea for your business out of your head and puts it down on paper. So where did this idea come from? Who is your target client? What does the market look like? What are you planning to sell? How are you going to market? And then it should also include financial projections. So how much is it going to cost to start the company? How much do you expect to make? Like, what are your sales and what does that look like over time? How are they going to ramp up? And then it also includes your projected expenses. And this is really important. We like to suggest, playing with different scenarios, preparing potentially, several sets of projections. So we all have, big hopes and dreams for our companies, and we'd like to do really well. From a lender's perspective, we want to make sure that you can afford to repay the loan. So when you come to us, we're looking for realistic projections, not like pie in the sky. I'm going to be making $1 million in year one. While that does happen to, you know, a few companies, the reality is that's not very common. So, you know, you can set a dream scenario, you can set, you know, a more realistic scenario. And what happens if this doesn't come through and we only get half of what we're expecting? Do I still want to move forward with this if I'm not getting the sales, right? A lot of businesses are not making money in the early years. So make sure that like you really think that through, and that's and that you're okay with that. So the next set of documentation are financial statements. So the profit and loss statement tells me very quickly how much money you make and how much money you spend, and whether or not you are profitable or taking a loss. The balance sheet is tells me what you own and what the business owes. So what assets you have. Do you have inventory? Do you have equipment, vehicles, property? You know, those things are. And then on the liability side, do you have loans outstanding? Do you owe money to anyone, anything like that? So it just gives us a quick financial snapshot of the health of your business and what's possible. So when we're meeting with businesses for the first time, financial statements are one of the first things we ask for, just to quickly see what's possible. Is the business profitable? Okay, you know, we can keep this conversation going. We know there's excess money to repay the loan. If the business is taking a loss, it's a different conversation. It doesn't mean the loan is not possible. It means we have some work to do to figure out if this is going to work. If you're not preparing financial statements right now, I'd highly suggest doing so. They provide you a lot of really good information, and then you can also compare them over time. So as your business grows, it's helpful to look back and to see those trends, and you can start making informed decisions around a number of things based on where those trends are going. So business and personal tax returns tell us similar information to your financial statements. They're just more historical. Your financial statements, right, you're going to have in the interim between filing taxes. So we do suggest that you file your taxes. We do occasionally run into businesses that aren't filing taxes or aren't reporting all of their income on their taxes. And so I do want to share that's problematic for a number of reasons. You'll have to be current on your taxes to obtain a loan. But from an income perspective, we can only use income that is reported on the tax returns to make a loan. So sometimes we will see businesses not reporting the cash that they get, only reporting card sales. And so we're not able to use anything that isn't running through the tax return. So keep that in mind as you make your decisions for your business. We highly recommend reporting all income. For a number of reasons, it's going to show your business more profitable over time and like really the total of what you're able to do. So a business debt schedule tells me, so if I look at your balance sheet and I see that you have loans on there, I'm going to ask you to complete a debt schedule. So your debt schedule tells me what loans you have, the interest rate, what your monthly payment is, if you've used any of like your business assets to secure that loan, and when it will be paid off. So we take this into consideration as we are doing financial underwriting and making sure that you can afford to take on more debt. Business bank statements, we are only able to make loans to businesses, so we have to make sure that you have a bank account in the name of your business, right? We're lending to an entity. We want to make sure that that entity can negotiate the funds that we are lending. Personal financial statement provides me similar information to the business financial statements, but it's on you, the business owner. So what you personally own, what you owe, and if you have any other outside income sources. We do pull credit here at CIC for most of our loan products. We don't have a minimum credit score, so we take it into consideration. It's a factor we look at, but we're looking more at the history. We understand that life happens. Sometimes you have to make a decision to pay a bill or, you know, pay your rent, and so we want to understand the story behind. If you have blips in your credit, that's totally understandable. Were you able to get back on track? Do you have delinquencies right now? So we're looking to better understand the picture and not focus on a score specifically. And then lastly, based on the type of business that you have and the reason for needing funding, there may be additional documentation required. So if you want to purchase a piece of real estate or I don't know, a piece of equipment, we're going to ask for more information on that, and it will unlock a different set of documents. So some transactions can get pretty in-depth. For the most part, a typical loan package just looks like what you see here on the screen. I know that was a lot, so before we move on, I just want to pause and ask if there are any questions on what we've covered in the last couple slides. All right. If anything comes up, we'll have time at the end. So we're going to move on to options available, the options that we offer here at CIC. So we have a number of different loan products. What I want you to remember is not so much the details of the products, because that's a lot. I struggle to remember that some days, but that we make loans up to $100,000. We have terms up to 5 years. We offer both fixed and revenue-based payments. So fixed means it's the same amount every month until the loan is paid off. Revenue-based is a little bit different. So rather than having a fixed payment amount every month, your payment is a set percentage of your revenues. So we'll say 5% of your revenues. So every week or every month, based on what you choose, we will check your revenues, and I'll explain this in a few slides. And your payment is that amount, 5% of your revenues. So in months where you have higher revenue, your payment is going to be higher. If you have slower months, your payment is going to be lower. So it's a great option, provides flexibility, not the right option for every business though. We have options for businesses at different stages. Our products typically start at 3 to 6 months of history. So we don't typically work with like true pre-revenue startups, but we are able to work with newer businesses. And then we have 3 different application types. So traditional, we collect documentation up front. We have a cash flow application, which I'll explain, and then a storytelling application. So as we cover these products, I'll talk about the application in a little more depth. So the first product is our small business loan. It's really just a catch-all bucket. It's available to everyone, and it's a great option to help you take that next step in your journey. So it does have a more traditional application, and that we collect a lot of the documents that we just reviewed. Something to keep in mind, the larger of a loan that you're applying for, typically the more documentation you're going to need to apply. So if you're applying for like $5,000 or $10,000, we're going to look at more recent history. If you're applying for $100,000, we're going to want to see, like 2 years worth of history and make sure that we have all the documentation. So keep that in mind too. Don't let like documentation scare you. Our interest rates are 8 to 10%. Terms are 1 to 5 years. We do have an application fee upon approval, and we do require collateral and the owners to sign a personal guarantee. So collateral, again, it's based on the loan size. We don't, sometimes we can just take a lien on all business assets. We don't necessarily need like real estate and vehicles for smaller loan amounts. So again, if you don't have collateral, don't let that stop you. Let us talk and we can figure out what makes sense. And for this product, you need at least 6 months of sales history. This is one of my favorite products. We have been working with the Community Food Bank here in Southern Arizona for probably 7 or 8 years now. We've had this microloan, and so it's to support small businesses in the food and health space. And so jointly, CIC and the food bank come together and we fund these loans. So up to $10,000. It's a very reduced interest rate, so 3 to 5%. Similar terms, 1 to 5 years. And so if you're in the food space, this is a really great option for you. And this is what I say, don't worry about the details of all of our programs. If you come to us and you're a food business, we're going to run you through this program if this fits the parameters of what you're looking for. But also, if you know anyone in this space, this is a great product, so send them our way. All right, so flexible loan payment. Success through alternative financing, or STAC as we refer to it, is a revenue-based financing product. So this is the payment with the flexible payment. We provide funding up to $50,000 through here. And this is for businesses that have been in operation for at least 2 years. So we need 2 years worth of history in your bank account in order to be eligible for this product. So what happens is you connect your bank account directly to our system, and our system is able to pull out your revenue data, and we can see exactly how much you've had coming in, going out. We're able to put together projections, which is really cool because you can see all of that in the system. And then your payments are a set percentage of revenue. So you'll tell us what your what amount you want to pay. And then as we go through the approval and the underwriting process, we'll lock that in together, like those final numbers. And so this payment's going to fluctuate with your revenues. I think everyone likes the idea of a fluctuating payment, but it does provide a little bit of uncertainty and that you don't necessarily know what it is every month. So you can certainly keep track of that yourself so you have an idea, but you want to make sure that you're putting money aside for that payment because it is going to pull and it is going to change slightly every month. We let you know what it is. So at the end of every month, we calculate what your revenues are, so what your deposits in your checking account are, and then the payment pulls so many days later. And then we project your repayment period to be between 3 and 5 years. So again, all of this is done on the front end. You're able to see all of these assumptions through the platform that we use. And the reason why it's a moving target is because you're not paying the same amount every month. If your business starts taking off and your revenues are just increasing, your payments are going to be a little bit higher, so you're going to pay the transaction off quicker. With this, there's no set interest rate. It's just a one-time fee. So that's how we're able to have payments be a set percentage of revenue, is that you have the loan amount, the one-time fee, they get added together, and then your payments are just reducing that balance. This product does not require collateral to apply, but we will place a lien on all business assets. So this is a really neat product. I'm not sure if anyone uses merchant services right now, like Square, PayPal, things like that to process card transactions. So you see revenue-based financing pop up in a lot of places. If you're processing transactions, it's likely that you have received a loan offer from Square or any of those companies. This is the same type of product. They just take it out of your daily sales. All right, so we have a couple products with storytelling applications. So the first is our BIPOC Loan Fund. So with this product, rather than providing a full application package ahead of time, and the decision being based on your application documents, the funding decision is based on your story. So we have an outside group of community members who sit on the committee for this fund, and they make these funding decisions. So they spent 9 months putting together this application, really trying to shift the lending process and provide an option for businesses to access funding if maybe this is their first time. If they've not applied for a loan before, it can be a really daunting process. What we covered a couple slides back, like putting together all those documents, if you've never put them together before, can be a lot. So through this storytelling application, you are able to share how your business started, the impact in the community, what you're looking to do, and really using your words versus numbers on paper. Your business does still have to be legally established. They're looking for, your sales for the last 12 months, things like that. But we can work with you through the process to pull that together. It's not all required upfront. For this product, you do have to be in business at least 3 months. And amount loans up to $10,000 at a 3% interest rate. So with this fund, the first step is to attend a mandatory info session. We will send an email out after this call with links to the different products and next steps. So if this is of interest, you can attend an info session, or you can reach out to anyone on our team and we can talk more about your specific business, where you're at with funding, and what's possible. One other thing to note about the BIPOC Loan Fund is that applications are reviewed monthly. So the timeline can be a little bit longer depending on when you apply. And then the last product I'm going to share is Kiva. So if you remember back to one of the very first slides when we were talking about crowdfunding, Kiva is an option for a crowdfunded loan. I'm not sure if anyone's heard of Kiva. They are known for crowdfunding in underserved communities across the world. So rather than collecting financial documents, they fund their loans through crowdfunding. So what it is it's best for businesses that have a strong social network, or social media following, or comfortable asking friends and family for support. So the way it works is that based on your loan amount, you are required to raise a specific amount of funding from people in your network. Once you hit that number, then your profile goes public and you have access to the whole Kiva network across the world. It's pretty cool to see campaigns, go through their funding, because so they'll say you need to get 10 people to invest in your business, and the minimum investment from each person is $25. So if you think you're getting a $10,000 loan and people are bringing together $25 a person, that's a lot of people that are supporting your business, but it happens. They all come together. So you have to get, let's say, 10 people. So you put it on your social media, you ask your friends and family to support you, and it's a loan. It's not a grant. You have to pay it back to them. They all lend $25. This all happens through the Kiva platform. So you're not having to manage all this. Kiva manages all that. Once you hit those 10 investors, then your profile goes public and everyone else can start investing. And it's really cool just to see all these people come together to support you. I know that it can feel awkward to ask people to support you, but I do want to challenge that and give you something else to think about. People who want to support us in many ways, right? Like if you have a coffee shop and they love coming to your coffee shop every day, they'll likely want to see you succeed. So putting it out there that you are raising money through a loan to do something new, you'd probably be surprised at how many people are willing to support you. So don't let the potential awkwardness of asking people for support stop you from moving forward with this product if you like that idea. So CIC does not oversee the administration of Kiva loans. It's handled by Growth Partners, but CIC and Growth Partners did work to bring Kiva to the Tucson community. So if this is a fund you're interested in, you can apply directly on the Growth Partner site, or you can even just go to Kiva directly and you'll get connected with the local representative here in Tucson. So here at CIC, we focus on loans of smaller sizes. And really we have a niche in the micro lending space. So like $10,000 and less. And we see a lot of businesses when they come to us, they have these not stories. I'm going to read stories in a second. They have ideas for what they want to accomplish. And sometimes it can be a lot. We want to do a lot all at once, but it's not always possible. And so I just want to share a couple examples of loans that businesses have taken out, really smaller loans, and how they've used them as building blocks to grow their company. And so change has happened for them, pretty substantial change. But it's happened over time and it wasn't all upfront. So if you're looking for funding and you're not able to get what you want right off the bat, I hope that these stories can encourage you to keep moving forward and to break your project down and to start with one building block and to keep going from there. So this first one is for a produce distribution company. They wanted to expand their cold storage from a 2-door 90 square foot fridge to a 900 square foot walk-in refrigerator. So this produce distribution company works with local farmers, works with local chefs, and bridges that gap, brings the produce from the farms to the chefs. And so they needed more, their demand was increasing, and they needed more storage space so that they could bring in more produce. So they were able to purchase a larger refrigerator and eventually take on new farms, increase capacity. And the reality is now they're a really important organization within our community. Like they've grown substantially. So it's been cool to watch that journey, but also just a reminder that like a little bit of money can really take you a long way. A frozen yogurt shop, this one, they weren't necessarily looking to grow their company, but it was more of an environmental impact. So they had a water-cooled machine, and being in the desert, they really wanted to reduce their dependency on water. So they used loan funds to purchase an air-cooled machine. You'll see here, and actually pause that. The final one is a marketing company. So the demand for their services increased, but they did not have the quality of equipment they needed to take on that additional work. So they had good equipment, but like they were starting to level up. And so they needed higher quality equipment. So they were able to take out a small loan and they were able to grow their revenues by 600%. Like that's a huge increase. That doesn't happen to everyone, but they were able to do that because they had the demand. They just needed the product. So the common theme among all these businesses is that they had a clear use of funds. They weren't trying to maximize the loan amount. They weren't trying to like fill the gaps. They knew exactly what they needed to accomplish their goal. And they did that, and they weren't reaching too high. They were reaching for that next step. And they have since had multiple steps they've taken since then, but they weren't trying to go to like rung 5. They were just trying to go to rung 2 and then rung 3 and rung 4. So there's many different ways that we can move through our business journey. These are just a couple examples that we've seen of really great success. All right, so we have covered a lot over the last 37 minutes. What I want you to remember as you leave here today is that we make loans up to $100,000, okay? If that's the funding bucket you're in, we are your go-to organization. We can be a resource. So obviously we have funding options. We also can provide you with some help on your application package, what you might want to prepare ahead of time as you think about funding. We can provide you, if you're not preparing a profit or loss statement or financials, we teach a class. I think we have a recording as well, which we can share about how you take your basically you download the transactions from your bank account and how you can start compiling that data to keeping track of your finances and ultimately move yourself to having more financial organization and starting to prepare financial statements. So it's a really good class for entry-level finance. And then we can also make connections across the community. So we work with a lot of other lenders across the state. We work with a lot of organizations providing business education. So whatever you need, let us know. And if we can make that connection, we would be happy to. And then lastly, I just like to encourage you to keep your financial house in order. So keep track of your sales and expenses. Honestly, even if you're not doing anything with them just yet, just keeping track of them so that you have the numbers so that when you're ready, when you need them, you have them, or that, when you're ready to start using that data in different ways, you don't have to like go back and recreate the wheel. You can, do what you need with them at that point. So start keeping track of that. And then the next step is to prepare reports and learn how to read them. They provide us with a lot of really important information as business owners. All right, so next steps here, if you're interested in learning more about anything that I've talked about, or you'd like to connect with our team, you can go onto our website. So on our main site, if you hover over what we do, there's this section that drops down called Businesses That Prosper. You can click here, learn about our products. There's a link to our inquiry form, so you can fill that out. We ask for just some high-level data on your business so we know where you're at, and that way we can have a more robust conversation when we meet with you. That will connect you directly with one of our lenders. And then if you have questions on what we discussed today, you're welcome to reach out to me directly. So I do run the lending department. I don't spend as much time in the day-to-day. So if you were interested in moving forward with a loan, I'd connect you with Iracema. She is our small business lending manager. She covers our Tucson market. She also speaks Spanish. And then Brandy Szymanski covers rural Arizona. So depending on where you are geographically, I will connect you with one of those. So with that, I would love to open it up for questions. I'm going to leave this up so you can write down contact information if you